Good morning and welcome to today's Join the Dots. I'm recording this Wednesday morning, just to let you know, and the silver price, which I'm very keen on at the moment, is 51.30. The reason I'm keen on looking at it is because this week we've seen silver go below 50 for the third time after going above 50. And in my world, and it doesn't mean it's foolproof, in my world, once you've seen it go 3 times through the old all-time high, then it's released from charts, data, whatever. And some of our best contributors, Francis Hunt, Market Sniper, sees 91 as the next stop. Well, it won't be the next stop, will it? Because it will up and down as we go up, but it'll go up in steps. But that's where it's headed, and that's the journey. The silver journey is a fantastic journey. And I think I'm reading more and more pieces now that say that obviously the bottom 10, 15, 20% of society just have no money. And that's understandable, and I really feel sorry for them. But for anyone who does have any spare money, they should be thinking seriously about what's happening in the world and what they need to do next, because it's going to be truly awful. And that's actually the heading. This is going to be horrific of the piece that I'm going to concentrate on today from Mike Maloney. But before that, I was preparing a piece for today earlier, and it was a Chinese banking piece, because we have to understand how fragile the Chinese banking system is. Now, I'm not saying the American system isn't fragile as well, and I'm not saying the European system isn't fragile. I'll give you some numbers in a minute, or the Japanese system. I'm just saying the Chinese is unique, and it's come through a unique period. It's never been here before, and it's in an almighty mess. But we'll do that tomorrow, because I wanted to do this silver one today, because silver is one of the journeys that can set you free. So let's concentrate on it. So silver, as I speak, is 51.30. It's the third time it's gone below 50 and come back again. In my world, that normally gives it a free pass. Okay. Now, in doing my research for the banking thing, I came across some numbers that really do make me, if you think, how have we allowed the world to get so out of control? How have we allowed the world, the economies, everything to get so out of control, the money systems, such that it looks like, and I'm convinced, we need a global reset. And we're going to have one, because we can't avoid it. And I looked at the government numbers. The central banks obviously have been buying bonds, and everyone says QE, and that's it, 2 letters, QE, move on. No, let's think about it. Okay? So the Japanese, who've been doing QE since the early 90s, because they were in such a desperate position, have now got 5 trillion US equivalent of bonds, Japanese government bonds, owned by the central bank. The US has $4.7 trillion, that's 9.7. The Bank of England has 2 trillion, that's 11.7. The ECB has 31.5%, they don't give a figure. I'm thinking that's around 5 trillion. So we've got 16.7 trillion of fake money. Fake money. Yeah, we call it QE, yeah. Ben Bernanke called it QE, but then he thought subprime was a 50 billion problem. And it was 3.4 trillion, 68 times. 68 times bigger than he told us it would be. So what do these people know? Very little. And what can they tell you? Even less. Okay, so 16.7, I mean, I haven't included China and its institutions, because that data is just so opaque, it's impossible to see. But if we round it up, we're probably around 20 trillion of money that just wasn't there, just been invented, just been printed. And people wonder why we've got inflation and why we've got runaway asset prices. I don't. It's obvious. We've imagined 20 trillion. And now comes payback. Can they do any more? Yes, they can. Yes, they can. But with consequences. And now we're realising that the consequences are inflation, and it can't be stopped. Plus all the geopolitical mess that we've got out there, with everyone fighting everyone, either politically, sanction-wise, trade-wise, kinetic-wise. Everyone's fighting everyone. No one knows what's happening. And we've all got to come to a table at some point and agree a reset. God, it's going to get messy between now and then, isn't it? it's going to get incredibly messy. And that's the point of joining the dots. Joining all those dots brings you back to what's going to happen next, okay? And what really can only happen, which is a complete reset, okay? Now, before I carry on, let me ask you, please, I think we're getting data saying that 40% of the viewers are subscribers. Please, if you are viewing, if you're getting anything at all, even if you don't like it, if you're getting something from it, though, that helps you make your decision, press subscribe, please. If we can get the numbers up, then we start to get pushed by YouTube, then we start to get more subscribers, and then we start to get some momentum. We had a lot of momentum up to 10k, but it's really stalled since then, and we've struggled to get to 11, I think 11.4, 11.5 at the moment. I really want to push it on, not for my sake, but to help people, because people aren't getting this information. They're not getting these dots joined. They're not even seeing the dots because they don't want you to. Anyway, let's carry on. So this piece, I'm going to link it. This is going to be horrific. Now, look at the stats. Just listen to the piece and look at the stats. You must look at them, okay? We are near the end of bubbles in both stocks and property at the same time. Remember, 2008 was just property. 2000 was just stocks. This time it's both, okay? The top 10% in America own 87% of stocks, okay? The top 10% own 85% of all private businesses and 44% of all property, all owned by the top 10% and all made incredibly richer over the last 15 years by QE. It did not help the ordinary person. If we'd had a reset rather than QE, at that time, the ordinary person would probably be doing better now because the prices of assets like homes, fuel, food would be a lot lower. So they would be actually in a better off position than they are now. They have been criminally punished, in my view, criminally, because the central banks knew they were creating inflation by buying all these bonds. They knew it, okay? So the bottom 90%, and Mike says this, just don't matter in economic terms. That is horrendous, isn't it? The bottom 90% of society just don't matter when you're looking at economic data. They can't influence it. So silver and crypto can at least be areas where these people can put a little bit of money and make a lot more money and have a better position after this reset when it comes. So Mike has been accumulating silver, as you know, and when it peaks, and we don't know where that peak is, we'll see it as it comes. Could be 200, could be 300, could be 500, could be 800. Okay, when it comes, then it's the time to buy the other assets because this peak will coincide with the troughs of all the other assets, property and stocks primarily. Okay, it's the wealth cycle. So, and of course, politically, this is the economic point where dictators arrive and surface and get popular. And that's not Donald Trump. Okay, it's not Donald Trump. Don't go there. It's so childish almost. Okay, Trump is not a dictator. Biden issued more executive orders day one than any president in history. So was he a dictator in your eyes? If he was, fine. If he wasn't, then don't blame Trump because they're just doing the same thing. They're just doing the same thing. Okay? They're not dictators. All right? But when dictators arrive, they come because of fear and hopelessness. They come because that 90% of the economic population don't see a future. And they'll vote for anything. They'll vote for anyone who says anything that gives them a chance, because otherwise they have no chance. 3 minutes 25, credit card delinquencies are now at record levels. Okay? 90 days or more delinquent in credit cards, 12%. I put a big expletive next to that in my notes because that is horrendous. Okay? 1 in 8. The only other time it's been this bad was right in the middle of the GFC. And where are we now? As I've said to you, we are in a GFC, but it's slow motion and it's silent. You're not being told, the media won't report it, but we are in a crash, but it's a silent one. because you don't get numbers like that. You don't get 1 in 8 people can't pay their credit cards unless you're in a crash. Just understand the data, please. Let's add to it, okay? And the thing is, the speed of this is frightening. And the serious job losses are only just coming, aren't they? But they're there. They're there. We've had 1 million go this year already. The job numbers are awful. The leading indicator index is off the board, okay? The auto loan delinquencies, okay? We're now at 2019 levels with the repo crisis. At that time, and a lot of people said it, not just me, a lot of people said it, and it wasn't a conspiracy, we needed something to rescue the financial system at the end of 2019. The repo crisis told us. I wrote to clients and said, this is awful. And along came COVID. But that massive, colossal stimulus that we printed then was just a plaster, because it didn't solve the issue. It didn't go to the cause, it merely dealt with symptoms. And in dealing with symptoms, you create bigger problems because the cause is still there. And so the symptoms just grow. And that's what we're seeing, aren't we, with inflation? We've seen it with asset price inflation, which excludes this bottom 90% who can't buy a house, who can't even pay their auto loans, who can't pay their credit cards, who now can't go out and eat. Hence, Wendy's are closing hundreds of restaurants. Okay? Mike says something here that's profound. Being early for a crash, and I'm always early, sorry about that, I just am, because I see things ahead. It's called insight. Someone accused me of claiming to be a prophet in yesterday's comments. Very, very sad. Very sad. Very sad. Okay? Using insight is not being a prophet. It's using insight. It's seeing things that you've seen before and you can tell people and help people with. Okay? So a sad attack. I'm going to remind you of the Agnico story, because Agnico I saw at $40 and now it's 170 thereabouts. And I've had so many of my clients say, no, I'm not going to buy it yet because there's going to be a crash and I'll buy it when it crashes. And they said that at 60, they said it at 70, they said it at 90, they said it at 120, they said it at 140, they said it at 160, it's now 170. If you wait for a crash and try and time it, you won't get it right. If you take the journey, it's safe. Okay? 6 minutes 20, car repo chart worse than 08. 2 million car repos in sight as the crash has not happened yet. It hasn't happened yet. Yes, it is. It's happening silently. It's happening below the surface. It's happening. 12% credit card delinquencies. Okay? 2 million car repos in sight. What's the value of a second-hand car now with 2 million sitting on the lots waiting to be auctioned? What is the value? Nothing. So what is the value of all these cars that everyone went out of their way to buy during the lockdowns? They went out of their way to buy cars. The car prices escalated massively because of the extra demand. And what have we got now? We've got a colossal oversupply. We've got millions and millions coming in from China. Okay? And we've got car factories with workers who need to manufacture cars to keep those workers. And those workers then pay their mortgages and their food and they go out and eat. They won't be able to. Okay, so the layoffs are coming. Massive layoffs are coming. 7 minutes 50, recession indicator. This recession indicator has never been wrong since 1950. Okay. What else have we got? The money shot. 3 years since 2022, Main Street has diverged from Wall Street. And it's a chart. And I'll try and link this. I'll try and get Craig to take this chart after 11 minutes. Because it's the divergence between Main Street and Wall Street. And it's never been bigger. Okay? So all we can do is prepare. That's all we can do. There's a lot more here, but a lot of it is repetitious. Bottom line, we're in an everything bubble. Stocks, commercial real estate, private equity, private credit, residential real estate, autos, credit cards, you name it, we're in a bubble. But the bubble is popping at different speeds in different parts of those industries. Private credit, private equity, commercial real estate, housing's next, okay? So in my eyes, bottom line again, the monetary reset has to happen, and it has to be metals or crypto. So I hedge. I don't gamble on one and not the other. I hedge. And that's called common sense in the world of finance. Anyway, thank you very much. Please, as I say, hit that subscribe button, and please share this. Please share this service. Okay, if you're getting something from it, then maybe some of your friends would. If we can get this service moving again, like we did it from 5 to 10,000, and we can get it to 20,000, we can help more people, because they're not going to get this information from any other place. And I'm bringing you all these dots together. I'm working 9-10 hours a day, as Anne will tell me, and will tell you. I'm working 9-10 hours a day, finding the dots and then joining them. Okay? Thank you very much, and we'll be back tomorrow for an incredible expose of the Chinese banking system. Thank you.